Good afternoon and welcome to BizTech's Asian Midday Market Watch. Jeffrey Halley, independent market analyst, joins us again today. Welcome to the show, Jeff.
Great to be back, Brian. Apologies for the lighting. I'm trying to hide my wrinkles.
All right, but you know, you're on the show for your brains, not your wrinkles. But
that's nice to hear.
Before we get your insights, Jeff, let's take a look at see how markets have been performing. But we start with crypto markets first. Bitcoin is at 18,849. It's down 0.82%. Ethereum is at 1,297.16. It's down 2.29%. Now, looking across the regional stock markets, the SGX is down 1.04%. Bursa Malaysia is down 0.51%. Shanghai is down 0.15%. ASX All Ordinaries is down 1.53%. The Nikkei is down 2.63%. The Hang Seng is down 0.16%. And rounding up the numbers, which is the Kospi, which is down almost 3%, down 2.89%. It's a bloodbath out there. Jeff, tell us why.
Yeah, if I'm trying to hide my wrinkles, so are the markets. It's been a very ugly morning. Most of Asian equity markets have tracked a very soft session from Friday from US markets, where these concerns are increasing that the Federal Reserve will continue to aggressively hike rates, even at the cost of putting the US economy into a recession. That will obviously have a knock-on effect through developing Asian markets, and that's what we're seeing today. About the only decent performance we're seeing today is Hong Kong, which is holding its own, most likely on the back of the easing of the quarantine restrictions, and also China is holding up, and I would suspect that's to do with measures they've taken to support the yuan.
Now, okay, let's talk about that first. Now, they've basically increased the risk reserve requirement on foreign exchange forward sales to 20% from zero. And that's effective tomorrow. Now, your view is that's going to have a positive impact on the yuan, or explain to us and break it down for us, please.
What they're doing is they're putting a reserve requirement of 20% on the banks if they sell foreign currency to their clients. So they're effectively saying to the banks that if you sell $1 million to one of your clients, then you have to put another 200,000 aside in reserves. This is a less than subtle mechanism to slow foreign currency sales to the commercial sector. So the commercial sector will buy the foreign currency and sell the yuan. So they're trying to reduce the selling pressure on the yuan. I think that's one reason the markets are holding up okay there today. I think we're going to see a lot more of this coming from developing markets, particularly in Asia, these sorts of mechanisms going forward to try and offset this relentless US dollar strength. I don't think it's going to draw a line in the sand with the selling, but it should definitely help slow the pace of that depreciation.
Now, Jeff, the elephant in the room right now is basically the pound sterling, which has hit a record low against the dollar. Now, break down for us what's happened, what are the possible scenarios that could play out in the UK economy?
Well, the underlying reason that the sterling is under so much pressure is Chancellor Kwarteng bringing in all these tax cuts, cutting stamp duty, postponing corporate tax increases, cutting tax rates across the board, income tax rates. Unfortunately, it's all being debt funded. It's not revenue neutral. So unless there's some economic miracle in the United Kingdom because of it, the debt situation for the government will explode. And this is what markets clearly feel, that there won't be an economic miracle, and they're voting with their feet, and we've seen the pound crash. Things were complicated this morning. Now, as an ex-foreign exchange trader myself in the financial markets, the worst time of the week is that time between 2 a.m. and 6 a.m. in the morning, Singapore, when the markets are open in Australia and New Zealand, but nowhere else. It's a time of very low liquidity, and when we get big flows going through the market, you get outsized moves. The sterling move today was a classic, and I'm sure there'll be a lot of wreckage to clean up with stop losses and also buying opportunities as the market tries to figure out what exactly was the low of sterling this morning. So combination of two factors there, economic policy and some very ugly illiquidity very early in the morning on a Monday.
Now, on a Monday then, what should we be looking out in terms of the rest of the week of key events and data points that could move markets?
Well, I believe it's really going to be speakers this week. Apparently, we have about 20 Fed speakers this week. We have some ECB officials as well. Jerome Powell's in there a few times. The markets, of course, now that we've seen these aggressive rate hikes last week, will be hanging off every single word. What they're probably going to hope they're going to hear is that Mr. Powell is signaling that we're getting closer to the end of rate hikes rather than a continuation. But I suspect they're going to be disappointed. They're not going to change their mind in 1 week. And we're going to see those relentless pressures on equities and non-US dollar currencies as the market comes to the reality that after 20 years, rates around the world are normalizing.
Now, Jeff, as always, thank you very much for coming on your show, and thank you very much for your insights.
A pleasure.
Now, we've been speaking to Jeffrey Halley, independent analyst in Asia Pacific on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It will also be on our syndication partners, TV stations, radio stations, and websites. Thanks for tuning in.